GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So we're going through some of the major asset classes here available for trading. That's Forex, commodities, indices and cryptocurrencies. If you did like us to cover some extra some pairs, I think most people are typically happy with these. It's the major Forex pairs, etc. But if you do want us to look at something else, please let us know. We'll be happy to do so. And if you are getting some benefit from the videos, then please just click that like button wherever you're watching. It really helps us spread the word. Okay, so without further ado, let's get straight into the Forex market. Last week was very much an interesting one. I'm starting with probably the least interesting market, although you saw that you can see here that there was some big gains in the latter part of the week prior and early start of last week, but we've kind of pared that back, and pretty much as I suggested, this 119 to 120 area is our critical resistance zone, which offered a little short-term support opportunity, a little short-term trade opportunity that took us basically as far as the 50-day moving average, and like 100 pips down, a little bit over 100 pips down from 119. Oh no, I'm underplaying that. Almost 200 pips down. 117.5 was pretty much the low there. So from 119 to 117.5, 150 pip pullback, and we've almost bounced all the way back up to that, towards that 119 again. And I would imagine that probably next time we get into 119 to 120s, there's quite likely to be another pullback as well. We're looking for the break to the top side, with 116 having held as support of the range. That's our sort of assumed scenario, but of course again always aware that we've got this long-term down sloping trend line in mind, which could cause some interim dollar strength, and certainly has done. But I think this will be a big deal if the dollar really starts to decline in value after years of gaining value over time against the euro. It's a real paradigm shift, and it should be interesting. It should provide some sort of better trading opportunities. In the past, where you've had these multi-month stints of euro weakness, then we could be looking, say, like we had during 2016, a big euro rally. We could get more of those, and when you have that multi-month kind of rally, it really makes the short-term trading a lot easier if you just keep in mind that we're in that phase of bearishness, or in this case it might be about to be a bullishness, that it just in these periods, after that first big month down, that you just want to be on the short side. Especially after the second month, 2 big months of weakness. Of course you can try and be contrarian and buy into it, but when you're looking at a big monthly down sloping trend line candle, when you're trading on the 4-hour, 1-hour charts, etc., it really helps the trades go your way if you trade in that same direction. That's a rule of thumb that I always employ, and it was a game changer to my own trading. So let's move over to sterling. We had this upward sloping trend line in place last week, and it worked pretty nicely, and as you can see, we banged into 133. So we had a rally up, ran into 133, shy of the 134 to 35 zone that I kind of picked out last week as our kind of critical zone equivalent to what's going on in the euro. Pullback from 133, pretty perfectly. 200 pips down to 131, and now we're attempting a little rebound again. So general idea here is that we're uptrending, and we want to be in the direction of the uptrend. Buying into 131, it's a 200 pip pullback, and so I can certainly see how that makes sense. It's kind of in the middle of the support from the former resistance from these two peaks. This peak, and you're basically 131's the round number in the middle there to buy into. So that certainly makes sense. But if you do think we're in this kind of more like a channel here, then actually it seems like we could get a deeper pullback. And bearing in mind this week, the pound looks fairly decent at the moment, looks good. but it's a big week for Brexit. I mean, these deadlines always get kicked down the can, always gets kicked down the road. So we don't know if this is the big week for Brexit or not, but it potentially could be. It's not all over if a deal isn't signed, but we certainly could see some volatility if either a deal gets agreed and that's strong for the pound, or if just they push things back again. It's getting a little bit too close to that end of year deadline. So some news events around Brexit to watch out in terms of the sterling this week, and that adds to the idea that, well, you don't want to buy into just really small pullbacks. If we're looking at a volatile week potentially because of Brexit, then that adds credence to the case of waiting for a bigger dip to buy into, or waiting for a big rally up to the highs and sell into that, because we know it's volatile and the price can move around a bit, so it's not going to go in a straight line one way or the other. Moving over to dollar yen. Wow, this downsloping trend line has just worked so many times now. So again, we ran into 105.50, the resistance after this huge rally on Monday. And again, the trend line worked. We're down 105.50, we're down to 104.50, so we've seen 100 pips of decline here. I mean, this looks pretty massive, but then if we pull back to the weekly chart, we can see this is a fairly consistent thing that's been happening. We get below, down towards 104, below 104, and we see big rebounds. And actually, compared to these, it's not so big, actually. We did close the week lower, which was unusual, and we did get the snapback. But not to the extent as on prior occasions. So still reason to believe that maybe this downsloping trend line continues holding. Maybe we can just eviscerate this whole big move up by gradually drifting down and lower. The trend is down for now, and as has been the case for a while, we're looking for a break of this declining trend line to suggest that we then want to be looking for trades to the upside. So always very much with the trend in mind. I, for myself, would not have been buying down here, although of course that was a beautiful one-day trade. But certainly would have been mindful about selling into this downsloping trend line because that is in line with the downtrend. Okay, moving over to the Aussie. This is the short-term chart. Let me just get a bit of context here. Not a lot's happened in the Aussie since last time we spoke. We had that big move up, tested those old highs. That was last week, I believe, and then we've just gone pretty much nowhere since. So how do we interpret that nothingness? Well, obviously we're taking a pause before we decide our next direction. What I would say is that this doesn't tell me massive selling happening in this area. This tells me taking a pause. This tells me profit taking more than heavy short positioning building up. So my thought here would be that probably the Aussie continues to the upside here after this consolidation. Of course it can dip and then rally, and that seems quite feasible, but I think the ultimate direction is higher here, just because there doesn't seem to be any evidence of big sellers coming in. Now that could change once we get up to these highs up here around 174. That's obviously a bigger level, 174 and then 175, 0.75 above. That's when the big heavy sellers could come in, but no sign of it yet at 73 based on these very short width candles. So I'm looking for further push to the top side, and 75 is a round number. It's above the old high. The old high is obviously resistance first, but I think after this big long pullback, if we are up to 74 again, I think we get to 75. Now let's have a look at gold. Gold, what a devastating week for gold that was. Could have been a lot worse and may still get worse again. So this is almost the opposite of that dollar yen move that we saw, where we saw dollar rallying and yen collapsing as a haven. We also saw gold collapsing as a haven when the markets were very risk on a week ago, last Monday. So yeah, that certainly spoiled the outlook for gold a little bit here. It's pretty much completely invalidated this triangle. We had the break to the top side, so that was good, But any test of that downsloping trend line, you would want to see the price bounce from it, but it didn't. It crashed straight through down to those 1850 lows again. But nonetheless, you'll see that I've actually left it on my chart, this this kind of triangle here, because I still think that maybe maybe this was just a bit of a kind of crazy aberration, and all the price action has meaning, but sometimes sometimes the market just has to flush out, especially in gold. If it was any other market, I'd be very concerned, and I am still concerned that probably there's a distinct possibility that we head lower. But in gold, I'm more confident than I would otherwise be, because it always has these periodic nose dives, and it quite often just recovers straight away. So I've left the downsloping trend line on, because I think if we continue to move above it and we can close the week above it again, maybe we're okay. And then obviously the next step would just be to close above 1950. So I think we've definitely got to be wary here of this big down move, and I'm sure there will be people selling into this rally, particularly at these old highs here. So look for some selling down there around this area, or potentially we don't even get through the downsloping trend line again, and then ultimately we don't really have to second guess ourselves here. For me, I assume the range continues with a slight upward bias until we take out 1850, and now it looks like more likely that we'll do that now after that big drop last Monday, but nonetheless I'm still waiting for the actual break, and we've not had the break yet. Moving on to oil. So oil, we basically ran into those highs from the middle of the year, from August and September, at 43, and we've dipped back from there. And we've had 3 downward days in a row, but still this was pretty positive price action. And you can see that there's rally, dip, rally, and we're having another dip here. Didn't get as far as 40, and we're already pushing higher. So I would like to see oil get back above these old highs here from where it dipped basically, and then assume that we can carry on. And I'll be buying up through into the top of the range again. We are still range bound, but to me this looks like it's ready to push to the top side. Let's move on to crypto markets. Now I did want to leave on my analysis from last time around, because that did obviously work pretty nicely when we had that first rally up, and I said, okay, we've got 15,000 at the 38.2, and then on the 1 hour chart, if I get rid of that, then you can see that we had that little low down there, that little spike low from the previous pullback, perfectly at the 50. So I said between the 38.2 and the 50%, that could be a decent little range, because both those levels have some significance. And as it was, we got a nice little bullish engulfing candle on the 1 hour chart there, and we went sideways for a while afterwards, came back, almost challenged the 15,000. But we've rallied up, and we banged into 16,500 almost. So yeah, Bitcoin looking very bullish, but almost too bullish at this stage. It's been a very consistent uptrend without any really major pullbacks, and we could be due one. And for me, probably let's just get rid of this, slightly distracting now. If we are in for a big swoon lower, then we've hit 1650. Maybe we can get to 17,000. It would seem a bit odd to kind of pull back from 1650. I don't think there's too much significance about that price. 17,000, I think that's maybe want to look at is this month, where we tried the kind of recovery after the first collapse in December. Now what was the timeline here? That was yes at the end of 2017, when we thought we could bounce back, and then we put in a high around 1680, 880, and then rolled over. So maybe that would be an interesting price level to look out for. I just had 17,000 in mind. I thought 16,500 is a bit random to kind of top out at. So there might be a little bit upside left, but I think the risk to reward now is shifting in favor of selling Bitcoin. I don't want to do that yet because there's no sign that this trend is ending, other than a little bit of bearish divergence on the 4-hour, not really, and there's just heavily overbought. For, you could say, if we count all these little curves, overbought 1, overbought 2, overbought 3, overbought 4, maybe we'll get an overbought 5 and we tank back into out of oversold territory again. If we did, this 13,800 where we consolidated before seems like a natural place to head to me. And obviously that would be a pretty sizable move, but certainly wouldn't be the end of this up move. But seems like a bigger correction is due. Maybe nothing too dramatic. Maybe we just need to go to 15,000, maybe 14,500. If we topped out where we currently are, that's a 2,000 point drop roughly, and that'd be equivalent to something like this. Another one of these. This one was a bit more violent. So I think probably we're heading, this is not the time to get really aggressive Bitcoin, I would say. After this run up, we probably want to wait for a dip first to load up again. Okay, last but not least, here is the S&P 500, and so hit a record high last week, but not, according to our pricing, at least not well, we did hit a record closing high too, but not above the intraday spike that we saw on Monday. So bit of a kind of bearish signal there, but we kind of built up again throughout the rest of the week and did finish on a positive note on Friday. So it all does looks pretty constructive. These were the same lines I had last week where we pulled back, and you can see this one. We were talking, I think last week we were talking about whether we go any further down to these old highs. There wasn't any need. We went sideways for a little bit, and futures as of Monday pointing up to the top side again. All looks fairly positive. Just the only thing to be concerned about is our good old rising trend line through the peaks here. Maybe we're hitting some major historic top in which before prices decline severely. So if we start to see some really bearish action, and we say, for example, we see the price drop heavily for a couple of days, and keep this trend line in mind, and just think that, well, actually there could be a lot further to go from a longer term perspective after a couple of days sell-off. So don't be too put off selling into a couple of days decline if it looks like something has shifted, because that could be the beginning of a bigger down move. But that's all a bit speculative for now. For the moment, actually it looks fairly positive. We're just in a trading range. So I know last week was a positive one and we did close at record closing highs, but if you think about this being the support, actually like this is basically our resistance, and we closed above it as of last week, and so we're challenging the resistance at the moment. So there's still actually opportunities to the short side just from the perspective of the trading range, and then if we see some move to the top side, then we can tell ourselves that, well, a trend is in place and start looking at dip buying rather than selling the highs and the lows of the range. Right, I'm going to call it a day there. Thank you very much for attending, everyone. Thanks for watching, and good luck for trading this week.